G'day folks, Jim here from Orchard Forex. It's Monday the 15th of June. I thought I'd put out a quick video on the technical outlooks for a couple of the markets as the world begins to come out of the lockdown from the pandemic, albeit that it does appear that the chances of a second wave of the virus remain awfully high, particularly in the US. But we'll have a look at some of the technicals and see what they have to say, starting with the stock markets. Well, the S&P closed with a rally of about 0.75% on Friday, but it has opened with a gap lower first thing here on Monday morning. It's currently trading in very early futures. Asia's yet to really open up, but it's trading below 3,000, and the very short-term charts do look pretty heavy. The hourlies, as you can see, look as though we've got some downside ahead of us. So do the 4 hourlies and the dailies. So we're currently sitting just above, this is a daily chart here, we're currently sitting just above the 23% FIBO support of the whole rally up off the lows from the 23rd of March. If we do break this support here, the 100-day moving average looks to be the next stop was around 29, 40, 50, something like that, 35. And below there, I think, you know, we can probably head back towards 2,900 and eventually even towards 2,800. I think that's some way off there. But the dailies do look heavy. Against that, the weeklies still look pretty positive to me. So if we do head lower, we are going to find support here. We've got the 100-week moving average at around, just around that 2,900 level. And then the 200-week moving average is that's 200 points lower. So my outlook here really is looking to be short in the short term, but looking to buy dips, because I do think with the weeklies looking positive, we can retest these highs up here. Sort of towards 3,200, 3,300, but that's some way off at the time being, and I suspect we're in for some downside momentum. Overall, I think it's going to be, the market's going to remain terribly choppy. I guess coronavirus headlines are going to drive it one way or another, but for now, be short, but look to buy dips structurally in the longer term. The same really applies to the Australian market. Now we're sitting currently on trend support here, up from these lows. What's this, a 4-hour chart, back in mid-March. So we're currently sitting on this as well as the FIBO support. Now if we do break that, and I do think we probably will in the near term, we're looking to head back down towards, well, I guess this low here, which is sort of 5,600, somewhere around there, 5,640, and below there we can sort of head back towards 5,500. Longer term though, this is a 4-hour chart, as I say. The dailies do look heavy, so I think we are probably heading to test downside support. But once again, with the weeklies looking pretty positive and still somewhat oversold, I kind of think that structurally we can be looking to buy the dips for a bigger move, but I think right now it's too early to be buying it. Resistance would come in. Where would resistance come in? On this the 200-day moving average? Sorry, beg your pardon. 200-week moving average is back up here at 59.70. So that's going to see some decent offers. And before then, we've got the 100-day moving average really at 5,900. I don't think we're going to see it up there today, but if we do, I'd be looking to sell into it, because, as I say, I think the dailies are going to take us lower before the weeklies eventually allow a bigger squeeze to the top side. The monthly charts, they're slightly negative, I guess, but they're not really showing a great deal of momentum either way. So overall, look for some choppy trade with a view to buying in dips structurally, as I say. Going ahead to the currencies, right, here we have a 4-hour chart of the Aussie. Now we got up to that sort of 70-60 level last week. Since when we've seen quite a reasonable sell-off, really in line with the stock market moves. But I think with risk off currently looking to be in play, we're probably going to come down here and test last week's lows at 6,800. Now, if we do break below 68 figure, then I think we can possibly see a deeper move towards this or 67 area. The 4-hour charts look slightly negative, and the dailies equally topping out after having failed up at above 70 cents last week. So they're pointing lower. The weeklies do look slightly positive though, so I think if we do see some downside movement, it's going to be a slow crawl to the downside. I think there's still plenty of buyers. Australia is still seen in terms of a safe haven, really. Managed to largely dodge the bullet of the coronavirus. It's pretty well under control here, so I think the Aussie will see some safe haven buying. Interestingly, going forward to the weekly charts, now the Aussie, we made a couple of failed attempts last week to get above the weekly cloud, and we've opened this week below the base of the cloud. So the base comes in around 68.60, and the 100-day moving average is up here just about Friday's high at 69.10, I think it was. So this will act as resistance, and I do think, given the look on the MACDs in particular, that we are going to see this test of 68, the figure, and the Tenkan here comes in around, well, that's a long way off, 66.65, and this is a weekly chart anyway. We've already broken below the Tenkan, and we're now making our way back here to the Kijun, which 67.30 is where the daily Kijun lies. So I think it's some while before we get there, but I do think that's the direction of it. While we're here, we'll have a look at the euro as well. Weekly cloud is actually approaching the cloud top, so that's going to be good support down around here, really at current levels, 112.20, and below there we've got the daily, the 100-week moving average at 112.15. So while I do think the euro is going to see some downside movement, as we'll have a look at in the momentum charts in a second, I think any move to the downside is probably going to be quite slow. We'll go back and have a look at the charts here. So the momentum, the hourly charts are actually slightly oversold, and we did open with a slight gap lower this morning. We closed at around 112.60 on the weekend. We more or less filled that gap now. I guess we have actually filled it, really. So we could see a minor squeeze to the top side, but as shown by the hourlies as well, if that were to happen on the day, we're going to see resistance up here around these kind of levels, or 112.75, and then up around here where the 100 and the 200 hourly moving averages are going to cross at around 113. The 4 hourly charts are pointing a bit lower though, and the dailies also look as though they've got some negative momentum. So I'd be looking to sell rallies, but not looking for too much in it. If we saw it back down around 111.70, 80 over the next 24 hours, I'd probably be looking in some profit. The only other thing we'll have a look at today is oil. Okay, so here we have a weekly oil chart of West Texas Intermediate. Now you can see we have this huge head and shoulders here, which allowed us to trade down to zero and below a couple of weeks or a month or so back. And this is the neckline here. And I'll show you on a daily chart. There's a gap to be filled in here. We've more or less filled in that gap actually, but I think this is going to be pretty strong resistance here. This is in the 40 to 43 area, but if we go and look at the daily charts, I've got a feeling that this is a kind of reverse head and shoulder. This is the gap obviously that needs filling, and we've more or less already done that now. So I think we're in for some choppy trade here. But as long as we stay above this sort of neckline here of around $33, as long as we stay above that, then the measured target really should be somewhere up around $55. So that's a long way off at this stage, and I'm not really quite sure what there's out there that's going to actually push oil well higher, but technically I do kind of like it. The dailies are not suggesting at this stage that we're about to make that move. They're correcting after having become overbought from the rally down from zero. But the weekly charts do look positive. So if we can take out this neckline here, then I think we are slowly going to grind our way back towards this 50-55 level. So it's just something that's worth watching. For the next, there's the resistance area. You can see this gap here. I think we've more or less filled it in. Yeah, pretty much. So this will, I think, be resistance. The neckline, I think, is going to be the support. I'd be buying dips at around sort of 33, 34, but I'd have a pretty tight stop loss, say around 32, maybe just under $32 a barrel. So if you want to, that's probably all we'll have a look at today. I've got more of this on the website. So if you go to orchardforex.com on Monday today, there's a bit of a technical outlook there which kind of reiterates what we've just been through here. So I'll leave it there for now. Have a good week's trading and talk to you next week. Cheers.